Good evening, everyone. Sorry for the slight delay. Speaker of the evening, Senior Advocate Mr. Vikram Nankani, my colleague Sandra Dias, Vice President Narayan Pasari, Joint Secretary Sunil Gabawala, other office bearers, seniors, ladies and gentlemen. We are here to discuss the indirect tax provisions of the Finance Bill 2017. And you all must be wondering what is there to discuss. Well, hardly any changes are there. So the FM has not tried to tinker with the law at all. Rather than he's saying that let you all wait till the GST comes. So I don't want to even tinker with the rates also. So then what then we are just thinking amongst the BCA also that then what is to be done about this session that we always have over the years. So we said, okay, no, we don't want to break the tradition. And our speaker, this is his 10th year speaking from the BCS forum. And this tradition has to continue. And sir, we want you year after year. So we thought of requesting him to take up the indirect tax provisions as well as certain constitutional aspects of the GST. And we are obliged, sir, that you have agreed to that. So what is the thing that is happening? Is this a silence before the storm? Storm being the GST, because I think quite a few of us or quite a few businessmen or locals, citizens are not even aware what is GST, what is there in store when GST actually comes. And there are so many issues. How one is going to resolve? What is one going to do about it? So I think, and even in the from the angle of the constitution, validity and various issues are there. So what is actually the game plan of the government? Why it is showing a good picture, or is it actually everything is so good about GST? We'll be knowing after once it is really there. Um, but a lot has transpired over the years in GST, and each FM has been trying to make a point. The then FM, Mr. Chidambaram, while delivering the interim budget and his last speech as a FM, and I like to quote him, he says that the revenues are of paramount, it is from his budget speech, revenues are of paramount importance. The best source of revenue is taxes, and for that we need modern tax laws. I am disappointed that we have not yet been able to introduce GST. I leave it to you to answer the question. Who blocked the GST when an agreement on the game changing tax reform was around the corner? We have also got ready a direct tax code, and that will serve us for at least the next 20 years. I intend to place it on the website for a public discussion without partisanship and acrimony. I appeal to all political parties to resolve to pass the GST law and the DTC in 2014-15. Come same year, Mr. Jetli came, and he also was embarking on the GST program. And what does he say in the budget speech in 2014? He says that we are now embarked on two more game-changing reforms: GST and what the Economic Survey has called the JAM Trinity, the Jan Dhan, Aadhaar, and Mobile, to implement direct transfer of benefits. GST will put in place a state-of-art indirect tax system by 1st April 2016. The JAM Trinity will allow us to transfer benefits in a leakage-proof, well-targeted and cashless manner. And he then raised the service tax rate from 12.36% to 14%. Come 2017, we are still waiting for the GST to happen. He says, and I quote, "We firmly believe that demonetization and GST, which are built on the third transformational achievement of our government, namely the JAM vision, will have an epoch-making impact on our economy and the lives of our people." So, what is really going to happen? Is GST at all round the corner? As we have been promised, the council is sitting, it is making certain commitments, the states are not agreeing. So, sir, we are keen to know a few things from you, sir, with regard to constitutional aspects of GST. What would be the impact if the center or some of the states are unable to bring in GST before September 2017? What will be the options before the government in that scenario? Whether branch transfer, which are to be considered as deemed supplies, will be within the broad constitutional framework. What would one interpret supply of service by a person to his branch? What would be the scope of the same, sir? And now, still, we are unresolved with as far as the software is concerned, whether it's a service or a goods. These and many more questions I hope Mr. Nankani will take us through. A brief introduction of Mr. Vikram Nankani. He is a designated senior advocate. He is an India qualified lawyer at the bar since 1986 and completed LLM from Government Law College, Mumbai in 1988. He joined the chamber of Mr. Ashok Desai, the senior advocate and former Attorney General of India. Between 1986 and 2003, Mr. Nankani appeared as a counsel in variety of matters concerning commercial dispute, corporate matters, economic offences, and criminal cases, tax, shipping, and arbitration. He is a fellow of Chartered Institute of Arbitrators, London. Mr. Nankani was the partner in economic laws practice from 2003 until his designation as the senior advocate in September 2014. He is also the chairperson of the SIAC, India National Committee. He is also on the governing council of the Mumbai Center of the International Arbitration. Mr. Vikram has been chairman of the Indirect Tax Committee at the IMC, Chamber of Commerce and Industry, since 2011. He is also the honorary secretary of the CSAT Bar Association, Mumbai. Mr. Nankani appears as special counsel for SEBI. Besides, he is extremely humble, down to earth, and approachable. Please join me in welcoming Mr. Nankani. Before I request him to address us, may I request my Vice President Narayan Pasari to offer a memento as a mark of our gratitude. Mr. Nankani, please.
Mr. Chetan Shah, Mr. Pasari, my friend Sunil Gabawala, ladies and gentlemen. I would have been surprised if the finance minister had made changes in indirect tax laws. I think to that extent he gets 10 out of 10 because he has met with the expectation. Any changes by him would have been a sign of being overambitious, not only because it would have further delayed the GST coming, this is what my belief is, because any changes would have caused more confusion than clarity. But it would have again made the path for GST a bit more turbulent. To what I heard in the introductory speech, and your president said that he would want me to come year on year and continue the tradition. Probably this is the last time that I'm standing before you. Not because I don't want to come, but it is the constitutional design that will prevent any budgetary connection with the GST. It is a GST council which will now take over. It is the GST council which will now decide everything in relation to classification, rates, rules, regulations, place of supply, point of taxation. Everything will be now decided by the GST council. And the finance minister will only be an ex officio chairman of the GST council. So remember, it's not going to be a part of the budget exercise. The big hype that we have in our country, budget is always a very exciting moment for not only the industry, but as I see it, increasingly for professionals. And I'm afraid that this probably was a swan song for the budget in relation to the GST, in relation to indirect tax. You will never again probably get a budget in relation to indirect tax, except, of course, the general what would be the revenue collections, what would be the deficits, what would be the estimates, how the money will come in, how the money will be spent, but not on the substantive law of indirect taxes. Customs, of course, but customs is decreasingly getting importance of under the budget. I mean, except for rate changes and tweaking, and I'm sure you would not like me to come and tell you how much rate has gone down or gone up. And most of the changes are today sectorial. Exemptions are being removed, valuation rules are in place. I have yet to see a very challenging change made in customs which will call for devotion of your time, and I'm really really impressed by the fact that all of you here and all of those, I believe, watching, uh, have had the courage and the heart to pull out time from your busy schedules to hear what is not there to be heard and seen in the budget. So I'm glad that you mentioned about customs, that yes, it is going to be an ornamental monumental piece of law, but insofar as the budget is concerned, I am afraid that there will not be anything intellectually stimulating for you and me to sit down and have an August gathering like this. I'll be very grateful if you call me for a cup of tea, but I will be very shy of saying that I must stand before you and deliver a lecture for 60 minutes on anything that is connected to indirect tax in the budget. In the budget, yes, there may be changes. There were bound to be changes, and there are bound to be teething problems. But at this point of time, it's a wolf story. You remember that story? That wolf is coming. So the GST is coming. And till it comes, when the wolf comes, I don't know whether we'll be ready to fight it, whether we'll be ready to deal with it. It's a matter which only time will say. So let me first do justice to the purpose for which I'm here, namely the budgetary discussion on the budgetary changes in indirect tax laws. And then, uh, since I have spare time at my disposal and I have nothing better to do, I will try and entertain you on GST to the extent I can. Uh, as far as the budgetary changes are concerned, again, I'm not going to deal with the changes in the tax structures because there are very few and very sector specific changes. But the broad changes as far as the legal position is concerned, maybe a few that you can really count on your fingers. So let me start with the first one, which according to me is a significant one, and that is a change in the definition of importer under the Customs Act. Um, Importer, as we know, is defined in the Customs Act as the person who is the owner of the goods and who holds himself out to be the importer between the time the goods enter the territorial waters and the time the goods are cleared for home consumption. That is the definition since 1962. So, owner and a person holding himself out to be the importer. If you remember in the good old days, why this definition was there, because in the good old days, uh, and I think quite a few would not have been in the profession by then. In the early 90s or the mid 90s, we had a system of letter of authority. Importer who would import on behalf of an advance licensee or on behalf of various types of REP licenses, that you would have to import under a letter of authority. So you would import it. So you're not the owner, you're the agent. You would import it, and therefore the definition even covered those persons who would file a bill of entry as persons who hold themselves out to be the importers. Now they have introduced the concept of beneficial owner into the definition of importer. And this, of course, is part of the winds of change which you see across all taxation jurisdictions or jurisprudence, that the government wants to really go into who the beneficial owner is, whether it is income tax or any other law. So, similar concept has now been introduced into the Customs Act. And there is another reason for extending this definition, is because very often they found that in those unscrupulous cases where people would, you know, find file bill of entry only on the basis of name lending, or just had an IEC code, and they would just be on paper and exist, not really in substance. There's no economic substance to the entity, and they would lend their name and file bills of entry. In such a situation, recovery of any tax demand would be extremely difficult. It would also give people a handle to say that you have to serve a notice for less charge demand or reopening of assessment on to the importer who has filed the bill of entry, and not the financer or the de facto importer who is the person or the brain behind this. So in so to rope in all these persons, uh, I know you would have questions in your mind. What happens if I'm genuinely a financer? I mean, I have financed import. What happens if I am genuinely a buyback buyer who has given some advance for these imports? Would I be covered? Would I be considered as a beneficial owner? So it much depends on the facts of the case. But today, the law has extended its arm to the beneficial owner of the goods as far as the definition is concerned. What its impact would be. So, if a notice of reopening is served on the beneficial owner within the limitation period, would it serve the purpose of Section 28? I don't see any corresponding changes in Section 28, but by virtue of this extended definition, I suspect that it would meet the requirements of Section 28, which provides for issuing of a notice for past recoveries and past dues. Um, then there are certain timelines that they have introduced in relation to advance authority. They have now collapsed the two into both for direct and indirect tax and made a common authority for advance ruling. They've said that all cases would try and be disposed of within 6 months. In the settlement commission, they have introduced a cosmetic change. It was already there. There were enough case law judgments that a co-noticee can also file an application for settlement. Mind you, this has caused some confusion in people's mind, and many have misunderstood this amendment to mean that does it mean that if the main noticee does not file, the person on whom there is a demand for tax or demand for duty, if he does not file, can I, as a co-noticee, go and file it? So let's assume that a show cause notice is common and it is issued, let's say, to the taxpayer, and it is also issued to a transporter or a custom house agent or some other such entity connected with the transaction. In such a situation, maybe a custom house agent will come and say, can I not go and settle it, because it will otherwise jeopardize my CHA license, or I will have some other implications and repercussions. So can I not go because the importer is not available, he's absconding, or the taxpayer is not willing to go because he doesn't have the money to go and settle. So can I go and settle and make an application? The answer plainly is no. This is an additional provision. It is just making things express what was already implied in the system. There were already enough cases. A co-noticee can only make an application if the main noticee has already made one. He can't independently sustain a cause of action for the settlement of the case. Because, mind you, it is settlement of the case, and which is the common principle adopted across the board, even for income tax, that you settle a case and not just a application of a noticee. So that amendment really, as I said, is very, very cosmetic. On the service tax side, I think there are two significant amendments that have been made. One is now they have retrospectively clarified that the value of the land is to be excluded from the works contract or the valuation rules. Now, again, uh, there were decisions which were supporting this proposition that there was never a case for the jurisdictionally they had no power to tax anything in relation to the land itself per se. Now, of course, they have clarified it, and gladly so. This will take care of a lot of litigation which is already pending and excluded it with retrospective effect. The other amendment, and again, this has also been done with retrospective effect, also takes care of a large number of disputes pending on that account. Although there is a decision in the case of Noida Authority that if you are paying a premium, maybe one time, maybe over a period of time, for transfer of certain rights to a state industrial development corporation like MIDC, GIDC, and it is in respect of a lease which is 30 years or more, then you do not pay any service tax on that amount. As I said, in the context of Noida agency, there's already a decision of the tribunal. This merely reaffirms, but it shows the positive intent that you want to bring litigation down and avoid unnecessary confusion in the law. So this also has been taken care of. There is uh, an important amendment in relation to service tax, which was made before the budget. And there is no constraint on the government now to wait for the budget to be announced. And that is in relation to freight which is paid in relation to imports into India by foreign shipping companies based outside of India. And this amendment now seeks to postulate a reverse charge mechanism on the person who engages or enters into a contract for carriage, that there is a recipient of service, in other words, and says by an explanation that the tax shall be paid by the person who has the obligation to file the manifest in India under Section 29 and 30 of the Customs Act. So, if you are, let's say, chartering a vessel, and you, the charterer, and the ship owner from whom you charter the vessel are both outside of India, or even if you don't charter a vessel, let's take a normal shipment where you just book a container for shipment, let's say from Singapore to Bombay, and you are a party who's based in Singapore who's selling the goods to an Indian party on a CIF basis. So you understand, in a CIF basis, the obligation is on the seller to arrange for shipment. The title passes when the documents are negotiated, depending on the terms of the payment through the bank or direct or whatever. And in that situation, the bill of lading is endorsed by the consignor in favor of the consignee, and then the consignee goes to the agent here in India. Once he gets a notice of arrival, NOR, he goes to the agent and gets a delivery order. He surrenders the bill of lading and he collects the delivery order. With the delivery order, he goes to the customs and takes physical possession of the goods. That's the scheme of how this system or trade works. Now, in this scenario, what they have said, that when the goods arrive in India under Section 29 and 30 of the Customs Act, the agent is required to file a manifest. It's called the IGM, Import General Manifest. And they say, therefore, it is his responsibility now in law to discharge the tax on the freight which is collected by his principal outside of India. So, the person who's selling the goods sitting in Singapore, if he has gone, let's say, to American President Line, which is one of the leading shipping companies in the world, and he goes to the Singapore office of APL and says, I want to send this container to India. What is the freight? He may pay the freight, whatever, $10,000, $20,000. Ordinarily, that freight is component, or the element of freight is not known to the buyer in India, because it's a CIF contract. It's a composite price. You have a CIF which is cost, insurance, and freight. So the buyer is not supposed to know the freight. He only has negotiated for the CIF price. Now, whatever that freight element is, whether it's $5,000 or $20,000, the seller, if he has paid that freight to the shipping company will have to disclose that amount to the agent who files the manifest on behalf of the shipping company and pay tax 15%, that is 14 plus 1.5.5, 15% tax on that amount. Of course, today I don't think there is any clarity as to how will you assess the amount. How will you say it's 5,000 and not 10,000? And why will not that tomorrow the assessing officer pull you up and say, sorry, I have another certificate which is given by some other company which shows Singapore to Bombay on the same vessel, he has paid $20,000. How do you say $10,000? So it's going to lead to chaos. It's going, because freight is negotiable. It's from party to party. It depends on a long-term contract or a one-off contract. So it depends on that. Now, in that situation, there is bound to be a lot of discretion which is to be exercised. We don't know whether it will be exercised judiciously or not, but the fact remains that this is one big area of concern. So the agent, when he files the manifest and before he issues the delivery order, he will have to pay. Now again, it depends on the terms and conditions of the contract. The buyer here will say, why should I pay you the service tax? because I have bought it on CIF basis. I am only going to pay the price as indicated in the invoice. The invoice will come to the bank. I will make the payment under the LC or DA, DP, whatever the terms of payment are. So you are going to have one more side issue between the buyer and the seller, and is going to be compounded or made more complex in a situation of a charter where you charter the whole vessel. So if you have bulk cargo coming in, be it wheat, be it coal, and you have chartered the whole vessel, then the amounts are going to be huge. Then we are not talking just of $5,000 and 15% on $5,000. We are not talking about $750. We're talking of much, much, much more. In such a situation, where do we stand? I am sure, looking to the reaction that I have got from the industry, there is a serious concern about it. Uh, but the government seems to be very determined, saying that this is done world over and we will also implement it. And in case of an FOB contract and in case of an Indian person who books the freight, if he is liable, why should a party sitting outside of India whose goods land in India and the destination is in India, why should he not uh, pay the tax? The argument that the service provider, namely the ship owner, and the service recipient, namely the seller of the goods, are both outside of India, and the payment is made outside of India, then why the tax in India? Really, there is no answer from the government on this. This will have to be tested if somebody wants to test it in a court of law, and that will mean that there is going to be a stalemate till then. And till then, it depends on person to person how much risk he is going to take, which agent is going to take the risk of waiting for the court to decide, which consignee, which buyer will go back to the agent and again say after, oh, I've lost the case after 5 years, come, here is a service tax. So it is going to put pressure on the industry. On one hand, we hear of government talking about cost reductions of the transactions, ease of business. This certainly is one step which they have quietly done 18 days before the budget on the 12th of January, and I'm not sure whether its full implications have been understood till date. So that is something that I thought I must share with you. Uh, Outside of these three or four points, I really don't think there's anything much on which we should spend time and debate. There's nothing really much to say. It's there in black and white in the in the budget. Not nothing to analyze and have a discussion. But I'm open to any questions outside these issues which may be thrown at me. As sorry, okay, fine. See, to my mind, at least one party should be in India, and then you can provide for it. So when the government is provided on FOB, I can understand that on FOB there is justification. Uh, I believe that some part of the taxable event should have a territorial nexus with the country in which you are levying the tax. And therefore, as I said, you really can't compare an FOB situation with a CIF, particularly if the recipient also of the service is outside of India. The agent here is not an agent of a recipient in of a service in India, and nor of a provider of the service to an Indian party. I can understand, like we have these artificial definition where a branch office or a liaison office is considered to be a taxable person in India for the purpose of reverse charge mechanism, and when import of services, we are talking about import of services. But he is the agent of the ship owner, and the ship owner is not rendering services to an Indian buyer. So that's why I said if it's an FOB, different considerations apply. If it is CIF, forget the hardship that will be caused in implementing it smoothly and correctly, without any hardship or inconvenience to the trade. But apart from that, even legally, I think this needs to be thought through more carefully. So, as I have been now mandated that since I have come here, I can't leave the room at my will till the time which has been allotted to me is complete. Uh, so what I will do, three or four constitutional issues on GST have been raised. The first one is a very interesting question as to what happens if Section 19 of the Constitutional Amendment Act is not implemented, which says that the laws in relation to indirect taxes, that is excise, service tax, and VAT, will cease to be in force after completion of 1 year from the giving into effect of the Amendment Act, which is September. I think it's 12th September. 12th September. So what happens in that situation? Because you're aware that this constitutional amendment is not a simple constitutional amendment by a simple majority. It has to go through 50% of the state legislature's assembly. So what happens is, will the entire process be repeated? The answer is yes, if they want to. They have to. There is no other choice. So you will have to have the parliament first pass it. Then you will have to have the state legislatures, 50% of the state legislators to pass it. And God knows, by the time we are talking of September, 2 or 3 states may not be part of the original 50% which had passed the resolution. So we don't know. So constitutionally, that is the provision. What is the way? What is the implication if that does not happen? Then it is pralay. It's revolution. You will be changing one yug. And I think the only way out then is to declare a financial emergency. That is constitutionally what I can think of, Article 370. I may be wrong and I hope I'm wrong. Because otherwise you cannot function. The states cannot collect, the states cannot discharge, spend that money, can't put it in the consolidated fund, because it will not be a tax authorized by law. Imagine, again, you're going back on 13th of September to excise law and start saying that now you're a manufacturer, you have to pay by the 5th or 7th of next month of blah, 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 and all of that. It's not going to work. So you will need some authority of law to do that, because otherwise you violate Article 265. So this is a grave situation, and I think everybody understands this. And hopefully, whether it is the ruling party or the opposition party, I think each one understands the need of this reform, because each one is today in a mood to attract the investor. Whether you have got Dhoni's picture, which is larger than the chief minister's picture, or whether you have UP young chief minister saying that I am inaugurating a new project every day, or you have a lady in the east who says that I am going to invite industrialists and have a 3-day conclave. Whatever happens, each of them want to attract foreign investments and also the domestic industry. And I think therefore there will be, unless and until uh, the industry laxes. So as long as the industry continues to put pressure on the government, I think, ruling party or no ruling party, this should happen before 12th September 2017 at any cost. It has to. Otherwise, as a nation, we are really, really going to plunge into doom, because it will have its serious implications on the constitutional machinery. And we have seen that it's not easy to get a amendment passed in the parliament with no sessions, day after day. There's disruption of work. How do you then imagine this situation? So I'm hopeful, and I don't want to really be a pessimistic and look at the doomsday. So I would think that this should get through as soon as possible. Of course, between today and 1st of July, there are many imponderables. Many, many imponderables. Whether the governor will go tomorrow to Chennai, whether the Supreme Court verdict will come next week, whether the 11th of March, what will be the D-Day on that day, where will the 5 states, really the report card of the 5 states, many, many such imponderable factors, subjective elements, external forces, all of them will play a role in the mix which will decide whether 1st July is a cause for celebration or a cause for serious concern. Uh, so that's on the 12-month period. As to whether branch transfers can constitutionally be classified or covered under the word supply, the answer in one word is yes, it can. It can. Because when you have intentionally departed and deviated from the word sale and substituted it with the word supply, then there is a supply, which means of supply could be as simple as saying transfer of possession. Transfer of possession is supply. If I today hand over this particular marker to, let's say, Manish or Govinji or whatever, whoever, it is supply. I may supply in a complex mind would mean something in return, that there has to be a consideration, but in an English pure, one of the meanings to be given in English language would be to supply by transfer of possession. Simple as that. In fact, if I'm not mistaken, in Article 366(29)(a), uh, the word supply is there. The word supply is there in the context of, I think, restaurants, and that subclause D and subclause E, uh, or E and F. But it is definitely there as one of the components of a deemed sale. Now, in that situation, when you have got a broad word like supply, and Parliament today has got ample power. I have said this repeatedly, and pardon me if you're bored of the same joke again and again, that in India, Parliament is supreme, and it can tomorrow redefine and say, henceforth, man will be called a woman and woman will be called a man, and that is a perfectly legitimate law. So, where now the focus and emphasis has shifted, in my mind, there is going to be very little scope for challenging uh, question of branch transfers being covered by the word supply. So they would, and then there is an internal mechanism of credit mechanism and some kind of other, benefits that we'll get. So it's not just a tax on sale. It's not just a tax on service. It is something much more in the hybrid form, and therefore branch transfer. I see nothing wrong in Schedule 1 covering branch transfers in the scope of the word supply. Coming to whether software is services or goods, again, my view is that this controversy has become academic now, because the days of dual taxation will go once GST comes in. There is no bifurcation today after the GST comes in between entry 84 list 1, which is dealing with excise duty or with service tax 92C, and entry 52 in list 2. They are not in two different silos. They have now been collapsed, and it is one fungible hybrid tax under Article 246 capital A, which is now called a tax on the supply of goods and services. Now, in a given case, therefore, you may say that this is packaged software, and therefore TCS judgment and this judgment all say packaged software is goods. In a different case, you may have a bespoke software which is customized, and you don't acquire the proprietary right in a software, you only get a license to use that software. How does it matter whether it is service and not goods? That is software which is a license, it's an IPR property. But today, for the purpose of GST, or tomorrow, sorry, I should not say today, tomorrow for the purpose of GST, it is the tax or the law is agnostic. It is neutral to whether you call it service or goods, because in either case, the rate of tax will be the same. Your value base may be different, and your justification for value base may be different, but then that is a contractual issue, whether you call it a license for using the software or whether you are acquiring a title in the property as software, as goods. it really becomes, to my mind, an academic issue. Yes, there will be other issues as to what will be the place of supply in case if it is by in the soft form, if it is supplied, etc., and all of those. But as a question of taxation per se, I think it will it will become more or less an academic issue. I can't see, unless somebody here can enlighten me on it. I cannot see how this controversy will continue to have an effect or survive post the GST which comes in, which is, as I said, it's a hybrid, it's a Bhelpuri tax. So, uh,
So the context in which that question was asked was primarily the place of supply rules are fundamentally different for goods vis-a-vis the services,
that's right.
and that's where I think the challenge would arise.
No, you are absolutely right. Therefore, I said that the real effect would be only in the context of that depends on the contract. That depends on whether you're selling package software off the shelf, or whether you are doing it by way of a, customized software agreement, or you're only providing a license to use. So those are the various factors: the number of users, the location of the users, from where it is provided. So it will have an effect on the place of supply, which will again be determined on the basis of the contract, and therefore that will be a contract specific issue. But on taxability, I do not see any major impact. So thanks, Sunil, for that interjection. But so I think this is where we stand today in GST. And I must confess today that I honestly, I mean, I must give myself a pat on the back that without reading the GST law, I'm completely ignorant. I have not read the revised model law, and it's the confession that I'm making in the public, because true to a senior counsel, I would rather read when the problems arise and not now when the problems are still in the incubation. But thanks to my friends here on the dais, they were very, very kind enough to leak the question paper to me. So they gave me a set of points on which I must debate and discuss, and I'm glad that those points are very, very important, engaging points on which I have shared my views with you. Any more questions from any person sitting here or otherwise? Most welcome, and I'll be happy to answer. But thank you very much for being a very kind audience.
So we are having the shortest of budget speech, but thank you, sir, very much for accepting the invitation after what transpired in the union budget as far as the indirect tax provisions are concerned. But I think he is open for any questions on the GST. So yeah, we just wait for the mic, or maybe service tax also, right?
So is Bitcoin transaction legally valid, and what would be the implication on GST? Because people are buying computers by paying through Bitcoin accounts.
Well, sorry. So far as the definition of consideration is concerned, I think that will cover a transaction which is which passes through a Bitcoin. It certainly is a consideration. It has a value. It has got an intrinsic value also. So it will be covered. Yes, where I think we will be getting more clarity is when we have a regulatory regime in place. Currently, as I understand, India does not have any regulatory uh, provision for bitcoins, and therefore, once that comes into place, that will then get a formal and legal framework. But even short of that, according to me, if it's a payment for consideration, payment which accounts or amounts to a consideration, payment of consideration, it would be taxable. Barter is historically covered because it has value. It has value. So barter is never a problem. I mean, the most evolved and the most modern form of barter is your joint development agreements, in a sense. In a sense. Yeah, barter, strictly speaking, by law, is chattel for chattel. I give you an item, you give me an item in return. But there certainly is a value to that, and it is capable of being monetized.
Sir, I don't know whether to call it a frightening, but you made a reference to the financial crisis India might face. My question is, that what is your call in a situation that the politicians also at the moment, with all the background factors that you have counted, are they not aware, number one? And if so, is there no alternate plan? What is your call on that? What will we, even as a professionals, we are asked so many things, and how do we position ourselves? Thank you.
I'm certainly not an astrologer, and even if I did get a degree in astrology, I would never read a political mind. Having said that, yes, it is a serious issue, but as I said, and as you also rightly said, let's not undermine the politicians. At the end of the day, they also know how much to stretch and how much to, um, fight against each other on matters like this. Uh, we did see that in the past, the finance minister had called leader of the opposition, had a one-to-one dialogue, and as I said, at the end of the day, whether today you're X party or Y party, you are ruling somewhere or the other in this vast country, and therefore you are going to get a mandate from the people tomorrow for some other reason in some other state. So you're bound to do something which will benefit the state, will benefit the people, attract investment. So I am sure that they will come up with a solution.
Sir, as we understand that the existing laws of excise and service tax will be there up to 12th of September, and simultaneously the GST law will also be effective from 1st of July. So how it will happen?
No, I'm sorry. I should have made myself very clear when I refer to Section 19 of the Constitutional Act. Once the GST law comes into force, then automatically all others would get repealed because there's a repeal provision in the GST law.
Please wait for the mic because this. Because if you don't speak on the mic, the persons who are viewing us, they will not be able to hear the question.
It's okay. Sir, the definition of supply, you said it covers transfers by way of possession. So if goods are given on approval, would it cover within the definition of supply?
Most certainly,
And
yes.
when would be the what point would the invoicing happen? Only after it is approved, or can it be before approval as well?
So again, without sounding diplomatic, it would depend on the terms and conditions of each contract. If you are aware, under Section 24 of the Sale of Goods Act,
Okay.
when you sell goods on approval basis, the title does pass when the period or the conditions for acceptance of the goods is
Lapsed.
achieved, or the period is lapsed or the condition is fulfilled.
Okay.
So that is the time when the property passes. Your contract could, if it is well drafted and well provided, say that until such time the person to whom the goods are given is a bailee. Now, so we are getting into very, very complex situations of those kind, and if you are going to get into transactions on approval basis, you should be careful enough to draft in such a manner that before the due date for tax payment comes, there should be some clarity on whether there is going to be a transfer of title or not. Otherwise, the tax law will have its own course. They may overtake the events which you may have provided for approval, and then in such a situation, only God help you that if it is not approved and returned back, how will the whole thing get unscrambled? So so be careful. You should marry Section 24 of the Sale of Goods Act with the GST law providing for payment of tax.
And sir, what about goods sent out on job work? Though they may not change the character fully, say for finishing, etc. Would that be covered within the definition of supply?
As I said today, this is the mother of all laws. It's a universal law. One of the schedules has an entry that processing or treatment of goods also amounts to a service. So either it is manufacture or it is service. There is no escape. There is no third category. So all these niceties of the various transactions and the nuances which you will seek to provide to the transactions, there is no escape route. All 32 directions are covered by the law.
Sorry to bother you again, sir. I think the definition of goods excludes money, whether foreign exchange connotes money, because money is what RBI supplies.
If you see, you are not reading the complete definition. Foreign exchange is specifically covered. Conversion of form of money from one to the other is specifically covered after the exclusion of saying service is not money, a transaction in money.
Sir, my question is with reference to the GST law. In the model GST law, earlier they defined all works contracts will be regarded as a service. But in the revised law, they have amended to define something called as an HLE bundle and all those kind of things. So with that, what is your view? Is whether in the GST law, works contract will be regarded as a service, or it will be bifurcated into goods and services?
According to me, if Article 366(29)(a) is there, and this is one of the questions which was posed to me, if that provision is intact and that has not been tinkered around, then it would continue to be a deemed sale for the purposes of GST law. Because you will have to harmonize the two, and you'll have to read the definition of 366(29)(a).
Sir, one issue which comes because of this 366(29)(a) is there's a deemed sale, which is supply of food and beverages by a hotelier or a restaurant. Now, liquor is kept outside the purview of the GST regime. So, essentially, when let's say the liquor is served in a restaurant, will that be a part of the GST regime? Will there be a VAT on alcohol and state excise on alcohol? And how will this entire thing span out? And how will we interpret 366(29)(a) in that direction?
I think this scenario has arisen even in the past under the existing laws where we have had such bundled transactions. And the law has recognized that if I have the ability to tax a part of the transaction, as long as I keep the other part which is beyond my reach outside the taxation net, then that is a legitimate transaction. So typically, like we always had this, whether land value should be excluded or included in service tax. And typically, we all knew the answer by common sense that it can't have it can't form a part of the value for the purpose of service tax. So it has to be excluded, and it got excluded. Same thing arose when Works Contract 366(29)(a) first came up, and in Builders Association and Gannon Dunkley too, the question was, oh, you are seeking to tax labor component, you are seeking to tax services. And the states came up with rules, regulations, and then you had the concept of composite tax being introduced for the first time. So I think that is going to be all part of the fine print. And you are a very, very apt question as to when you have under 366(29)(a) service in a restaurant of anything, including liquor, to be a deemed sale, and then you have a new entry in the form of 54, the amended entry 54, which keeps alcohol for human consumption outside the net of GST. I think there will be some fine print which will come in the form of some kind of rules to take care of those transactions which are partially within the net of tax and partially outside. It's a question of how you define the measure of the tax and bring through the measure of the tax, you bring the tax within the constitutional framework.
Sir, I would like to know treatment of intangibles like business combination transactions, etc., or say sale of goodwill, say brands. Would it come within the purview of GST?
Yeah, it has not changed anything. Even today's scenario, VAT is levied on most of these intangibles, and they will continue to be part of the GST. So there is no change in scenario. On the contrary, if I'm not mistaken, one of the Sunil will help me add in one of the schedules there is a entry which says that transfer of business itself without consideration it will be considered as a taxable transaction.
Even with a share swap.
So that's right. So I suppose something like a lump sum sale, or what do you slump sale, slump
Slump
sale,
sale.
that will also get covered. So that will cover include intangibles as well.
Okay, even if it is with a
Yes.
share swap.
Yes, I don't think that has. In fact, all the more it will get more vigorously enforced in those. I think as Schedule 1, there is a entry there in that slump, the transfer of business assets by itself.
So I will just request Sunil to make a few announcements and do the honors.
This Saturday, the BCS has two programs. The first program is a medical camp which will be conducted in the BCS hall itself. Those who are interested should, it's a very good program which we have planned. It's a non-academic program, but for your health. In the evening, we are taking care of your entertainment and we have a music masti which is at the Birla Matushri Sabhagri. Thereafter, we are talking about a 7th residential study course on Ind AS, which is from 16th of February to 18th of February. We have an interactive session with the students for success in CA exams, which is on 18th of February once again. A leadership workshop, which is on a non-residential basis at the BCS auditorium itself over here. And thereafter, we have a 4th youth residential refresher course, which is meant for the young members and the students, which will be held at Alibag. We have a 4-day orientation course on FEMA, which is on the 17th of March onwards, again at the BCS auditorium, and a 3-day workshop on advanced transfer pricing, which is again on 7th of April, 8th of April, and 15th of April at the BCS auditorium itself. All the details are there on our website and on the BCS newsletter. So whoever is interested on the respective areas can go and enroll yourselves for those respective programs. We also have pleasure in announcing that BCS has been approved as a GST training partner, accredited GST training partner by the NACEN. And we would be reaching out to the trade and the industry sometime in April with detailed intensive programs on GST training. And that's one important step which we have been able to achieve over a period of time. Coming to the formal task of the vote of thanks, the senior advocate Vikram Bhai has been generous enough in accepting this invitation despite his very, very busy schedule. Towards the start of his session, he has very nicely explained the redundancy of the budget and therefore his redundancy of a budget speech. But sir, we'll keep on bothering you, maybe not in a budget seminar, but in any other forum, in other seminars and many other places. We always bank upon you for any intellectual advice and any intellectual aspect of the entire law. So you talked about entertainment, and I would just use a combination word because this is a world of bundled activities. So I would say it was more an edutainment, a combination of education with an entertainment, and your witty anecdotes throughout the session made it very live. Of a 2-minute talk by the finance minister, and we have, of course, a very intellectual brainstorming which we had on the GST regime. Thank you, sir, for accepting our invitation and also accepting our request to cover some important aspects of GST and enlightening us on the same. Thank you very much, sir.